real question is this a liquidity crisis that can be solved with more liquidity, or is this suddenly a solvency crisis? Can we see this shutdown, global shutdown, continue for a long time? How long, nobody knows. And could we see bankruptcies, defaults, and that is really spooking out the markets. So it's a bit like valuations. When is the market cheap enough? Nobody really knows. And that's why, to some extent, you had these panic moves, right, that tend to feed on each other. And that's why I think this volatility most probably going to be very high. But also I think the market structure is changing. The plumbing of the system has some problems. We have a global dollar squeeze, liquidity crisis in the dollar, and that's why the central bank's injecting so much liquidity. But the only real question is, does it work in a virus environment, which is unprecedented? Coronavirus, more money printing doesn't solve these issues when the whole world goes into shutdown.
Yeah, exactly. And, the conversation so far has been that we have governments and central banks around the world trying to essentially financially engineer us out of a global health crisis.
Correct.
How soon before we see a stabilization, though, and what would that look like?
I mean, stabilization in the equity market would be more of a sideways move and not having these very large 9% down, 5% up days, right? But I think what's more important is also a global coordinated approach. And I think Singapore has done very well in containing coronavirus. Taiwan has done well. But I think even in Europe, unfortunately, the European countries, even though it's in the European Union, are not fully coordinated. And that is, to some extent, leads also to increasingly crisis of confidence. And I think what we are seeing, the psychology of investors is changing. If you remember the CNBC headlines, markets rise for hopes of more stimulus. Now I think it's the opposite. More stimulus actually means more bad news ahead of us, and they're really panicking, and investors are acting accordingly. So I think it's still too early to buy the dip. And with regards to valuations, that is also really the question. Are you of the view that this could be a prolonged shutdown? Then a lot of these valuations, even today, are still expensive.
Hadley also has a question for you.
Please, hi.
Rainier, it's Hadley out in Abu Dhabi. I mean, when we think about that kind of crisis of confidence, I mean, is the president and Secretary Mnuchin, are they getting it wrong, do you think? Because it seems as if the White House is much more concerned about getting $1,000 checks to people than it is about U.S. corporates, for example. Because at the end of the day, this is a question, frankly, not just of liquidity, is it? It's also all about debt, and it's, frankly, all about whether or not there even needs to be a moratorium for the banks.
Correct. And look, I mean, and I think what some people forget is unfortunately, it's a very sad humanitarian crisis. And again, many people were too complacent and in denial about the coronavirus outbreak and the negative consequences if this would spread. And hence, a lot of precaution wasn't taken. And now it is spreading to a level where it potentially is leading to defaults and bankruptcy. So that really is very difficult to price in. But I think it's also important that the narrative in Washington from policymakers changes. This is increasingly becoming a humanitarian crisis. It's not about the index level of the S&P or whether the market went up. I think that is a secondary question currently.